Hi, my name is David Walster, and welcome to my weekly news show. I'm a CPA, and I present the news to you and give you my opinions. Let's get right to it. So today, I didn't seem to find a lot of news articles that I found interesting about the financial world this week, so I was going to just do a refresher on tax planning since the year is coming to a close quickly. And so let's jump right into that. So first off, let's look at the standard deduction. So the standard deduction for 2018 is double pretty much for single filers and married filing joint. That's $12,000 for single, $24,000 for married filing joint, and that means a lot less people will be itemizing than have in the past. So that can be a good or a bad thing depending on what your circumstances are. But if you didn't have more than $24,000 in deductions in your married filing joint last year, then you probably don't want to worry about tracking any of your itemized deductions. So moving into a little bit more detail about itemized deductions, things to remember is that the state and local income taxes are now capped at $10,000. And so maybe last year you had enough to get over your itemized or standard deduction, and you would have enough this year to get over your itemized or standard deduction. But a good portion of that is state and local income taxes. You have to take into account that those are capped at now $10,000. So if you had more than that, you can only take $10,000 of that. And then on the same vein, mortgage interest is now limited. It's limited to, I think, $1 million in mortgage value. And then also, if you have a line of credit, the interest on that is only deductible if that line of credit was used to purchase improvements to the home. If it wasn't, you can't deduct that interest. And then on the charitable contribution side of things, something you can try to do so that you can take advantage if you like to give to charities is you can do bunching. And what that does is instead of giving monthly amounts throughout a year, so say the last 2 years you gave $15,000, well, $15,000 isn't going to get you over the standard deduction of $24,000 if you're married. And so instead you can give $15,000 in January of a year for the prior year, and then another $15,000 at the end of the year in December for that year. And that gives you a total of $30,000 in that year, and that will get you over that standard deduction amount and give you that advantage. Now, a lot of charitable organizations probably wouldn't be terribly excited about a donor doing that. So another way to do it is to donate to a donor-advised fund. And then the donor-advised fund can give that money to the charitable organizations of your choice in monthly installments. So you can do the lump sum gift to the donor-advised fund, get the tax benefit of that, and then the donor-advised fund can give that money to your charity in monthly installments. And then finally, if you're 70 and a half and you're required to take a minimum distribution and you also like to donate to charity, instead of giving cash to charity, think about instead using your minimum distribution and giving that to charity. And that way you can keep the cash in your bank account and you satisfy the IRS requirement of taking a minimum distribution. Now onto the withholdings. This is another big area that people are going to probably either get hit with by getting a large refund that they didn't expect, or they might owe a little bit of money. So going into 2019, since the 2018 year is over, you definitely need to check in on your withholdings, what's getting held, and change that or update it so that for the 2019 tax year, you're not paying way too much to the government, so you'll have a little bit more take home every paycheck in that. Or if you're on the other side of things and one of the few people who are going to owe money because of the new tax law, you're adjusted up so you don't owe any taxes at the end of the year as well. And then if you're a small business owner, remember that you may qualify for a 20% deduction in your business taxable income. Now, there's a lot of things that go around that, and depending on your income level, business income level and total income level, you may not qualify for all of it or some of it. But I put together a pretty nice tax calculator that helps walk through some of that. So check that out in the description below to get an idea of what you might qualify for. And then the last thing I'll mention is that the child tax credit has increased for 2018, and I think it's like $2,500 per child. But the difference there is that you now are required to have an SSN number or Social Security number for every child that you try to claim that for. And so if you don't have an SSN number for a child, make sure you get that when you file your 2018 tax return. Well, that wraps up the news for today. In case you missed it, we reposted a blog post about when should you file a separate tax return for your business. Check that out in the description below, and follow us on Facebook, LinkedIn, Instagram, and Twitter to be notified about when we release our next blog post on this this coming Friday and any of news and updates about Withholding Advisory Firm. I'd love to hear your thoughts about any of the stories I covered today in the comments below. Let me know if you have any stories you want me to cover next week by tweeting at me, and like and subscribe if you enjoyed today's episode.